Stephen Dean, thanks so much for coming on Wall Street Unplugged.
Thanks, Frank. Thanks for having me.
So I highlighted your most recent success at Atlantic Gold and the gains you made for your shareholders just before this interview, give you invest a little preview. Also highlighted some of the success you had over your career. Now you're on to a new project, which I know you're really excited about. Could you tell everyone about it?
Yeah. Well, Artemis has just closed the acquisition a few weeks ago of the Blackwater project in central British Columbia. It's a 10 million ounce deposit, very large by global and industry standards. It's located in central British Columbia, which is perfect and a strong jurisdiction for mining projects. It's literally an hour's flight from the capital of Vancouver, and we're pretty excited about it.
Now, when it comes to the Blackwater project, and I've done a lot of homework on this and research on it, how are we able to find such a great project? Because when I look at it, just when we're looking at super low, all-in sustainable costs, you said tier one mining jurisdiction, 10 million ounce reserve. It seems like when you look at the royalty companies having trouble getting really cheap assets or taking pieces of these assets right now. Talk about that process, because you really just closed this, I think, last month, right? I think it was announced maybe 2 months ago, but you just closed it. Now you're seeing it reflecting your stock price. Obviously, it's going higher, but how did this all come together? Because someone that's been in this industry for 3 decades, it's interesting to see how, when I look at this asset, it's pretty amazing.
Yeah, and we also, I should also mention that we released the pre-feasibility study, which basically is a whole different look at the economics of the project, and that sort of gives you a clue into the answer to your question. And in that, this asset has been on the development drawing board for almost 10 years now. It was held by a company called New Gold. They had some challenges in their business, and their debt levels increased, and it became an asset that was not core to them. And it was an asset that we, the Artemis team, were familiar with. Our team specializes in de-risking and taking a different approach to gold development assets. We did the same at our company Atlantic Gold before it was sold to an Aussie company called St. Barbara for $800 million in cash. But what we saw in Blackwater was the potential to re-engineer it and change the risk profile, reduce the initial capital, and take advantage of some of the ideas and approaches that we employ in developing assets, combined with an increase in the gold and silver price since 10 years ago, all of which together gave us the opportunity to present a brand new project with a very different production profile and more importantly, a very different economic return.
Now, you highlighted different approach. One of the things I noticed when I was researching is the use of leverage. And sometimes leverage is a dirty word to people out there, but you look at most developers in your space are going to raise money through secondaries, which really sometimes they'll dilute the hell out of shareholders sometimes. But with Atlantic Gold, and now I'm seeing with your new company Artemis, using leverage debt to finance development, explain why leverage is better for the shareholders.
Yeah, well, the first comment I'd make in response to that question is that management and board own approximately 42% of the company. So we're not hired guns like so many of the managers are in our industry. We are owners first and foremost. We make our money when all shareholders make money. And so shares and issuing shares is something we take very seriously. And the dilution of value by issuing repeatedly lots of shares in equity raisings is something that we approach with a lot of discipline. That aligns us, as you can imagine, very, very much with all shareholders, and it puts us in a fairly unique position. For a company our size, I don't know that there is any other company in the industry globally where board and management own that much of the company. And I think, as I said, that's one of our differentiators, and that's what makes us think and approach our business differently. And when you come to the question of finance and debt, we don't like debt either. But what we do know is where there is a question of cost of capital, and we always have to consider cost of capital in growing and developing an asset or growing a company. We've got to be mindful of where the best cost of capital is in order to grow the business. And when the stock, when your share price is trading well below value, then that means that the cost of raising equity finance is expensive. It's high. If it's trading at a premium to value, then there's an argument that your cost of capital is low or lower. The markets, whilst have improved in the last 6 months or so in 2020 for the gold sector and the gold price itself, it's still not bubbly or out of control, and it's still very discerning. And as a result, companies like us still are undervalued in the market. And so for as long as that persists, we are very frugal with issuing our shares because that is the most expensive form of finance we can procure. And when there is the opportunity, like there is with this asset, where it's located in a tier 1 jurisdiction, really long life, a 2-year payback on capital, that's the sort of thing that traditional banks, not these sort of high yield lending banks, but traditional banks like to lend into. And with interest rates where they are, Frank, as you know well, debt money is almost free these days. Now but banks are gonna lend at a margin, but off a pretty low base rate of zero or something near zero. So if we can borrow money for 4 or 5%, representing essentially a 4 or 5% margin for the banks, that's good business for them, but it's also the cheapest cost of capital for us.
Now, how important, because when I look at and I compare you to other companies and being involved in this industry and speaking at a lot of these events in Vancouver, when I'm seeing what you're doing on the financing side, how important is that for the leader to understand financing? Because sometimes these companies have geologists running them who think a lot differently, where they can drill anywhere they want, everything's going to be cool, and not focusing on that. But how important is it to you? Because it seems like that's how you build such a great following, where you're using these methods in financing. Remember, these projects in the junior mining space, most of them are not going to generate any revenue for a long time, so they're developed. How important is that? Because your focus on that, I could see why so many investors have followed you for such a long time.
Well, it sounds pretty ridiculous to say it. If you talk to people in other industries about the importance of the economics and return on shareholders, for most other industries, people say, well, duh, of course, that's important. For the longest time, our industry got away with a rising gold price over the last 20 years, and the use of capital and capital discipline was just not a priority, and size and scale and discovering more ounces, whether they were economic or not, often was the drivers. And that's never been, in my 35 years in business, cash flow and return on capital has always been paramount. And you can call it a little bit selfish in some ways, because the bottom line is, the reason why we think like that is because we are the biggest shareholders of the company. And so financial discipline, capital discipline, and managing risk, which is another whole sector of discussion, managing risk is really important to us.
That definitely makes sense. And When I started doing research on you and looking at your successes, you strike me as someone who doesn't really need to do this anymore, right? You just saw Atlantic, $800 million, and you've done it numerous times throughout your career. In terms of buying early stage projects, developing, financing. I mean, it's a lot of work. Why, after the huge sale of Atlantic, do you decide to get back in the game? Like, what's the motivation there? Because again, someone like you, I think you could be like, "Hey, I'm done. I'm gonna live my life." But to me, even talking to you, it seems like you're more motivated than you've ever been.
I am, and it's interesting you point that out, Frank. There's a sort of an extended answer to that. Well, the first part is I love this business, of course, and I love sharing and mentoring my team and my colleagues, and identifying new up and coming people in the industry where I can share whatever I've learned, and share the mistakes I've made in my career, and make a contribution that way. I also want to say that when I was president of a company called Teck, which was, and it still is, the largest diversified mining company here in Canada, for a number of years up until 2002, and I actually took a 10-year sabbatical from running businesses and running companies. I didn't step away from the business completely. I started a copper company called Amerigo, and I went on to some hedge fund boards and some private equity boards and those sorts of things. But I had a 10-year break in the middle of my career, which really re-energized me. And so when in 2014 we saw the opportunity to create Atlantic, with markets down and gold assets being unloved, that was a perfect environment for us to step back in and reassemble the team, many of which I've worked with for 25 or more years, and just deliver our playbook, which is all about managing risk, focusing on capital discipline, things like fixed price contracts on construction. So we make sure the risk of any capital overrun on builds is sheeted back to where they belong, being the company that's responsible for building it. Using the best technical approach to mineral resource estimation. It's called MIK, multiple indicator kriging. It takes advantage of the enormous amount of computing power that is available to us today using geostatistics, and thereby using things like grade control, high density grade control drilling, RC drilling during the course of mining to better delineate boundaries between ore and waste, and to use that modeling to improve performance and minimize dilution in ore bodies, with data which is typically 20 to 30 times more dense. In other words, more information is good to help us mine this deposit optimally, and way more than a normal resource model would at 25 or 30 meter spacing. So all of these things combine to help us manage the risk and optimize the performance of the asset. So you're right, we built Atlantic, and that was a success for many people, and we're very proud of that, and the team is proud of that. And frankly, I thought that with us having demonstrated those approaches to the business and developing an asset, that the market would be full of copycats, and that we would have competition again for these assets where these things could be applied. And it turns out that nobody's copied us. And I said to our team, look, here's the opportunity to do this again, but this time with an asset that's 5 to 10 times bigger, and therefore the returns potentially are 5 to 10 times bigger than what we enjoyed and were able to generate at Atlantic.
And I was going to ask you that question. How does this project, as someone who has that history of showing your shareholders so much value and just developing these assets on cost, on time, has it compared to other assets? But I think you kind of answered that, right? I mean, this seems like one of the best projects that I've based on what you're saying. But I didn't want to put words in your mouth.
It's an outstanding asset for which we can apply some of these disciplines, and there are not very many 10 million ounce gold deposits in the world that are not yet developed. Very few, in fact, and there's even less than that are in tier one countries, in not just in tier one countries, but in tier one locations such as backyard central British Columbia, and then finally, very few again that have the social and the environmental license in the form of an environmental assessment certificate to proceed to construction.
Yeah, that's just incredible. And what are some of the plans ahead for you? Because I know there's going to be a lot of people listening to this, and the listeners are very smart. They do their research, they do the homework. They're not geologists. They buy stocks across every industry. But the first thing they're going to see is, wow, this stock's up tremendously, along with a lot of the junior miners because of the gold price. To me, I don't think yes, it contributed to it, but it's because of this project, a pre-feasibility study, that really is a game changer to the point where I think your stock is cheaper today, based on price NAV, than it was even when it was $1 before you really made this announcement. I don't know if you'd agree with that assessment, but what do you tell shareholders that? Because that's the first thing they're going to see is, wow, this stock has gone up a lot, and people associate a higher stock price with a more expensive company.
Yeah, look, I think analysts and yourself and your listeners are going to need to do their own homework and their own evaluation. But the facts are, and this is all we can speak to, that we've done a detailed study, a feasibility study to proceed towards construction of this project, which tells us that at $1,500 gold, not the 2000 or 1950, I think it is at the moment, gold price, that is the spot price, at $1,500 gold, which is what the street says is their best estimate of what the long-term gold price is. I frankly think they're way off the mark, but with governments devaluing their balance sheet by the spending that's going on in order to battle this pandemic, it will only serve to cause a further rise in gold price. But forget all of that, and really that's speculation. What we do is we base our assumptions on conservative assumptions. Gold price of $1,500 US. This project generates a net present value, which is the discounted value of the cash flows that it will generate, of 2.2 billion Canadian. And if you do the math and simply divide the number of shares that we have out by that number, that will give you an indication of what the ultimate value, once we've fully de-risked this asset and it's in construction and ultimately then commissioned and then in operation, that will give you an idea as to where real value lies, and that value is way above where our stock price sits today.
No, that's great. And one last question here before I let you go, and I really appreciate the time here. And feel free to say no comment, but I'm going to ask this anyway. I've been interviewing experts, billionaires, analysts, CEOs for 13 years on this podcast. I always do tons of homework on my guests because it's my responsibility to prepare for these interviews. And I was researching your career over 3 decades. It's incredible. I don't say that lightly. Yet I don't see your name mentioned in the same conversations as Lucas Lundins, Rick Rules, Eric Sprotts, Ross Beatty's, even though some of these people I just mentioned actually invested in your project. Does that provide any motivation to you? Because after doing that research on you, I think you should be included in that conversation.
Well, that's very generous of you. I don't see that. I all those names of those individuals I have the highest regard for, and some of them are mentors of mine. And look, I don't put myself in the same class. We just do what we do, and I think we do it well, and we've created value for a lot of people, and created a lot of value for ourselves and our supporters. So, what we do is slightly different, or different to Ross or Lucas and some of those other names that you mentioned. They're very, very successful people, and we're not in their league, but we do our own thing.
Well said. And Stephen, like I said, thanks so much for coming on. I mean, we really covered a lot. Artemis Gold, good luck with it. Following it for a while now, and I'm really, really excited about this project. Thank you for taking the time for coming on.
Thanks, Frank.